Hello everyone, welcome to the InvestWise UK. If you have heard the news that the UK property market is in a bubble in 2023, you might be worried about buying property at a high price and potentially losing money. Whether you are planning to buy property in the UK for your own use, rental or investment, you must watch this video. It might just save you from disaster, help you avoid risk or even making a profit. Many experts have predicted that the UK property market in 2023 could experience a decline due to global interest rate hikes, rising inflation, negative GDP growth, and other factors that could decrease people's desire to buy property, leading to a downturn in the market. However, halfway through 2023, the UK property market seems to have stabilized. So, did the expert get it wrong? Or is this a good time to invest in a UK property? As someone with years of experience in buying and selling UK property, I want to share my knowledge with you. Why do people in this industry continue to invest in and hold UK property despite the high property prices and the potential for a market crash? Can you still buy property in the UK this year? This channel is dedicated to share UK property market information in the most understandable way possible. If you are interested in the UK property market, please subscribe to this channel to receive regular updates and knowledge. Let's first take a look at the UK macroeconomy to see if it's really declining. According to economist Julian Sheeskin, the most common definition of an economic recession is 2 consecutive quarters of GDP contraction. In the third quarter of 2022, the UK's GDP experienced negative growth, indicating that it was in danger of an economic recession. In comparison, the GDP of the US and European regions rose by 0.8% and 0.4% respectively during the same period. Moving into 2023, the UK's economy continues to weaken and inflation is at all-time high. Experts predict that the economy will experience a mild recession throughout the year, with GDP expected to decline by 0.9%. The UK residential market in 2023 will indeed face significant challenges and mainstream real estate sales will be below the long-term average. However, there will be no cliff-like decline, and the economic situation is better than during the 2008 financial crisis. And why is this? I will continue to explain below. Before that, let's take a look at property prices and rents. According to the latest property market information from Rightmove, which was released on 19th of June 2023, the average new seller asking prices fell by £82 in June, which represents a drop of less than 0.1%. However, overall UK property prices increased by 1.1% in the past year. Although the increase is not significant compared with the decline at the beginning of the year, it shows that the market is showing signs of recovery. The reason for the recovery can be attributed to the severe shortage of rental supply in the UK. Over the past few years, UK rentals have been rising. According to data from the UK National Statistics Office, rental across the UK rose by 4.2% in December last year, with the average UK rental at £1,118. This is the highest increase on record, and the average rental increased by £120. However, since the record high rental growth of 12.1% in July 2022, rental prices are expected to continue to rise in 2023, albeit at a slower pace. The main reason for the rental increase is due to the high demand from tenants and the inadequate supply of rental properties in the market. This supply-demand imbalance forces tenants to pay higher rental to ensure they can rent suitable housing. Currently, the latest rental yield in Manchester is at 5.5%, which is higher than the rental yield of around 3% in Hong Kong. According to Rightmove report, the demand growth is driven by the severe shortage of available rental property. A property analyst at Rightmove stated that the current environment is a real challenge for tenants because there simply aren't enough rental properties available to meet demand. To address the supply-demand problem, a significant increase in housing supply is still needed in the long run. There will need a significant increase in housing coming to the market, as many people who were planning to buy a property will now be choosing to rent temporarily due to the sudden increase in mortgage rates, which exacerbates the situation of the housing shortage. This is a simple supply-demand principle. Local investors' willingness to enter the market is affected by interest rates, but the strong demand for rental properties provides an excellent opportunity for overseas buyers who are interested in investing in the UK property market. However, how can overseas buyers make the most cost-effective investment? I will continue to explain below. Another factor driving up property prices and rents in the UK is the announcement by UK Prime Minister Rishi Sunak in the Spring Budget in March 2023 to establish 12 investment zones across the UK, with each zone receiving £80 million in financial support over the next 5 years to stimulate economic development in areas outside of London. As experienced experienced property buyers know, the appreciation of property value is not mainly based on the quality of the property itself, but rather on the changes outside the property, such as infrastructural development and urbanization. In Hong Kong, for example, the prices of property in certain areas immediately went up after the construction of new transportation networks or urban development projects. Similarly, the 12 investment zones in the UK will introduce large-scale redevelopment projects similar to London's Canary Wharf, with 8 of the zones located in England, including West Midlands, Yorkshire, Greater Manchester, Liverpool, and parts of central England, aimed to improve the technology and economic development of these regions. According to research data, the UK government's redevelopment plan will have a significant impact on the real estate market in these areas. For example, in several large-scale redevelopment areas in London, the residential property prices in the surrounding areas have risen by an average of 2.2% per year, higher than other areas in the same administrative region. In 2023, to avoid the high interest rate environment and still earn a high rental yield, prospective property buyers who are applying for a mortgage need to be aware that Bank of England has hiked interest rates multiple times, and now the interest rate stands at 5%. The market expects that interest rate may climb to 6% next year, increasing the cost of mortgage payments. Therefore, it is advisable to consider purchasing long-term off-plan projects in 2023. I will create a video later to share how to buy off-plan projects and how to avoid the risk of buying off-plan. If you are interested, please subscribe and leave a message. For overseas investors who choose to make a cash purchase, they can avoid the process of applying for a mortgage and are not affected by interest rate hikes with greater flexibility. The demand for rental properties in the UK property market continues to rise. As mentioned earlier, using Manchester as an example, the rental yield is at 5.5%. Moreover, the phenomenon of local buyers putting their plans on hold due to the interest rate hike and choosing to continue renting is benefiting the rental market. Therefore, in 2023, these two methods can not only avoid risk, but also provide opportunities for overseas buyers to profit. If you are planning to buy a property in the UK, I hope this video can help you determine whether the 2023 UK property market is experiencing a bubble or if it's a good time to buy in. In the future, I'll be producing more videos using my years of experience in buying and selling UK property to help you find the right property. If you find this video helpful, subscribe to my channel and leave a comment to show your support. This will motivate me to keep producing similar videos and help YouTube recommend this video to more people. See you next week.